All right, welcome back, everyone. This is the Micromath Capital podcast. Today, I'm here once again, with Greg Beischer, President and CEO of Alaska Energy Metals. Alaska Energy Metals has had quite the exciting developments over the recent period here, and we are back to discuss them. So, first off, Greg, how are you doing?
I'm doing well, Declan. It's a pleasure to be telling you about our recent news.
Excellent. Yeah. So what we'll kind of do so that our audience understands what we're going to go through is Greg is going to present to you and discuss the recent developments, and then we will engage in a further conversation about how they got to this point, as well as the current economic developments that are facing the world at this time. So to kick started off, Greg, why don't you share us what has happened with Alaska Energy Metals, and then we can dive further into it.
Sure thing. Well, Declan, you know the story. We started this company just 2 years ago. It's focused on a spot in central Alaska, right near the highway, actually, that I've known about for a long time. And we discovered nickel there, nickel with other metals, though, as well: copper, cobalt, chromium, platinum, palladium, and iron as well, even some gold. So it's a polymetallic deposit. As of last summer, we'd proven that it was quite a large, cohesive deposit, but now we've done more drilling and recalculated our mineral resource, and the results, I think, are pretty astounding.
No, absolutely. Yeah, it really speaks to the size and scale of the project itself. And so perhaps now that we've given an overview of the project itself, why don't we dive into the actual recent events that have unfolded and how it has changed, or what will change in the near term as investors get to see the details that have been released here shortly.
Sure thing. Well, what you're looking at here is a plan map of you looking straight down on the Earth. That black outline outlines the conceptual open pit that would be excavated to get the ore. The ore is shown in those bright colors, blues grading upwards to red and magenta. Red and magenta being the higher grade portions of the deposit. So we did calculate an initial resource this time last year. We did more drilling summer 2024. And over the last month, our consultant Stantec has calculated an update to that mineral resource estimate. But the holes that we drilled this past summer added significantly to the southeast end of the deposit. We extended it by about 1.8 kilometers. And so if you look at the scale of this big long pit, it would be almost 5.5 kilometers in length. So it's a very, very large deposit.
Right.
I'm
And
going
just
to
for
show you. Sorry, go
Sorry,
ahead.
just for clarification, Greg. So we're talking about the southeast corner. So that is that cross section that is outlined with, it's labeled as the B2B area there, correct? That's that area, just so people
That's
understand
correct.
which space that is.
Yeah, we drilled out to that edge. That B to B prime is a cross section line, vertical slice through the earth. And the next slide I'm going to show shows a vertical slice along A to A prime, another one along B to B prime, and it'll show the pit. There you can see that dashed line is the lower pit wall. And these bright colors, the pink and red, are the higher grade portions of the deposit. But the entire thing is thick. It's about 300 meters thick. And so another interesting thing you can see on the B to B prime is that the pit now comes over this way to the south and catches a parallel zone of mineralization. And so a couple things. We've extended the deposit by 1.8 kilometers in strike length, but we were also able to imagine a deeper pit that gets ore at deeper levels, but also captures some of this parallel zone of mineralization. And that just really allowed us to make a much, much larger resource.
Right. Well, it clearly shows, and just the high levels of concentration as well. So what kind of steps does it take to actually like discover that extended depth? Like what is the process of being able to realize that there is that much more, as well as the cross section of the parallelism that you extended.
That's two things. First of all, you have to drill deep enough to be confident that the mineralization is there. But at some point, there has to be a cutoff when the resource is being calculated. There has to be some economic input to it. Well, how deep could we realistically excavate a pit? And so it has to be in the realm of economic possibility. So at some point it has to be cut off. And so it's cut off by the maximum depth of drilling and the maximum depth at which one might be able to economically dig the pit.
Got you. So there are some economic constraints, but you were able to discover these and then ultimately add it to the total size of the deposit overall. Is that correct?
That's correct. But there's no economic calculation yet. There's no calculation of feasibility, but the depth of the pit does have to be somewhat constrained by economics. And so Stantec, the consultant that did this work, makes that determination.
Gotcha. Okay. Excellent. So just moving on to the next section here, why don't you discuss the actual results that have been discovered so far, and then we can dive into each of the minerals and really like how impressive the actual deposit is and what it has to offer.
You bet. Well, sure. Let's take a look at some of the actual numbers here. You understand that there's a distinction between inferred mineral resources and indicated mineral resources. And that just depends on the drill density, how closely spaced the holes are used in the calculation. And the closer the spacing, the higher the confidence. And so inferred is the lowest confidence, but if there's enough drill hole density, then we can move it up into the indicated category, which is higher confidence. But one thing we can't do is combine inferred and indicated mineral resources. We have to keep those separate. And so that's why you see two tables here listing different numbers. And so you'll see down this column, I list the metals that are present in the deposit. Our calculation from 2024 in this column, the new calculation here in the 2025 MRE, and then a column showing the increase in the mineral resource. And you see on the indicated table that we were able to increase very significantly, 45, 50% in some cases. In the inferred mineral resource, it was much larger. The increases looks like they're all well over 100%. And so this is really a fantastic increase for the project. The other thing to note is that in our initial calculation, we did not include chromium and iron in the calculation because we didn't have enough drill hole data with high quality assay information for those metals. Now we do, and so we're able to include chromium and iron in the calculation of the nickel equivalent metal in the deposit. And that really helped with the value, and it really helped with the grade of the deposit, also the overall nickel equivalent grade.
Right. Well, and just so investors or viewers really understand, like these are not marginal increases by any measure, whether it be indicated or inferred. So as you're looking at these numbers, see, and as Greg mentioned, you cannot combine them, but you yourself can make an inference of this information and just see the true extent of this resource and the deposit as well. So I think it would be helpful, Greg, if maybe we could go through some of these metals and kind of discuss their actual value in the real world and what they can be used for, so that people can kind of put the metal to actual production and see where that value is derived. So if you don't mind starting, maybe we can start with nickel and then progress down from there.
You bet. And so let's look at nickel. And it is the dominant metal in the deposit. It accounts for about 75% of the value. And you can see on this slide, my arrows pointing on the indicated mineral resource table at a value of 5.6 billion pounds of nickel now known in the deposit. And yeah, I can't add inferred with that indicated, but in the inferred, there's 9.36. I can't add them together, but you probably could. And you know,
Yep.
that's a pretty big number, around 15 billion pounds of
15.
nickel.
Yeah.
And that's just about double what it was from our initial calculation last year. So
Right.
that's a lot of nickel.
Yeah.
Nickel, as you know, is metal that has all kinds of uses. It's an amazing metal, really. You know, it has such resistance to corrosion, even under extreme conditions. And so the world uses it for stainless steel, but also specialty applications in very challenging conditions, be it aerospace, defense applications, hypersonic missiles, you name it, nickel's in there. And then, of course, as we electrify our society, more and more nickel is used in batteries, rechargeable batteries. They call them lithium ion batteries, but truly there's a lot more nickel in that battery than there is lithium. So, you know, the projections for nickel demand in the coming years are really astounding. So far, Indonesia, with the help of China, has really stepped up to, in fact, flood the market with nickel. But those days, I think, are coming to an end.
That's it. And just one other point, as we've been following the story too, I think it is important to mention we have a chart available that we can share here too that just outlines the strategic importance of nickel and where it stands relative to other metals. And it is at the top of the list for America between 2025 and 2035. And just as Greg outlined here, both the reliance, like international reliance from Indonesia, China, and other nations, as well as just its usefulness, it puts it at the top of the list. So just help people can conceptualize how important this metal is. And of course, we'll discuss it further as well. But I think it is important that people do understand that. So anyways, I appreciate you giving me a moment just to explain that. But if you want to jump on to the next, we can keep going.
Will do. So, as I mentioned, copper, cobalt, gold, palladium, and platinum, they all contribute to the value of this deposit. And if you make a nickel equivalent calculation, the nickel equivalent grade, not yet including the metals chromium and iron, the grade on the indicated table is around 0.29% nickel equivalent. And so there's no change in grade from our prior calculation, despite the addition of a tremendous amount of tonnage. And the same is true at the inferred category. In fact, there was a slight increase in the grade of that material. And so, again, it's a huge deposit. When you take a look and combine these numbers, 7.78 and 12.61, it's a really big number for the contained metal.
Right.
Again,
Well,
the work that we've done in the last year has nearly doubled the size of the deposit, yet the grade has remained the same and the strip ratio has essentially remained the same.
right. And that's really important, right? Because what we're talking about when we're talking about this nickel equivalent grade here is that the deposit remains consistent, and as well as it's not being diluted in the quality even as you continue to expand. And then, as you mentioned as well, the strip ratio there, Greg, is that maybe you can just touch on kind of the environmental consequences of a large strip ratio and why the deposit counters that, as well as the economics behind that as well, just so people understand that.
Yeah, the strip ratio really goes to the economics. And what it means is what is the ratio of unmineralized waste rock that would have to be removed in order to mine the valuable ore. And so if our strip ratio is 1.6 to 1, that means we have to move 1.6 tons of rock to get 1 ton of ore. The higher the strip ratio means that you have to move more waste rock, and that's expensive. So
Right.
it's going to affect your economics. The lower the ratio, the better. And so, yeah, it means a smaller pit, which means less cost, but also more friendly for the environment.
Excellent. So yeah, you can just see that this is advantageous, and then again, just understanding like the true size and scale of not only the deposit as it was, but what it has become with this updated MRE. You can just see that this is not only an economically viable project, and of course there are more steps in order to kind of prove those economics, but just to really appreciate like how much abundance and value can be derived from this project is quite exciting.
Right. I'd like to take a minute, Declan, just to compare our project with our peers that have similar, what I call bulk tonnage. So these are very large, disseminated deposits that would rely on an economy of scale in terms of the method to mine them and make money. And our closest comparison would be the Crawford deposit, Timmins, Ontario, owned by Canada Nickel. They've done a great job. They're several years ahead of us in their drilling. They've completed about a year ago a feasibility study that had very positive economics. And the bars that you're looking at on this graph show the dark bar is the measured and indicated amount of nickel equivalent metal, and the lighter blue bar is the inferred resource amount of just the nickel. In our case, I'm showing here our inferred level of nickel equivalent and just nickel metal. I'm not combining these, but what I am saying is that if we were to increase the drill density and convert this inferred mineralization to indicated and better, measured and indicated, so that it's a direct comparison here with Canada Nickel's measured and indicated resource, we would have, with more drilling, a larger resource at a higher grade and a lower strip ratio. And we know that Canada Nickel has a robust economics for their project. They've attracted Anglo American, Agnico Eagle, and Samsung as strategic partners. So,
Right.
on the face of it, with another year of drilling, we should be in the exact same position as, at least in terms of size of deposit, as Canada Nickel's Crawford.
Right. And so it compares to one of the largest deposits that presently exists in North America today. On top of that, I think it is worth highlighting just the relative comparison of current market cap value from your business compared to Crawford and Canada Nickel, and just see the size and magnitude, or the disparity that currently exists, and then trying to just understand that as you realize what the true size and scale of this deposit is. And as you mentioned, Greg, like that will come to fruition or be realized in the coming year as you continue to drill and develop it. But I think it is important for investors just to see that Canada Nickel may be a couple of years ahead, but there is certainly the same potential or possible potential on a relative scale that Alaska Energy Metals can bring relative to this, again, the largest nickel deposit currently in North America at this time.
Yeah, I think you've captured that correctly, Declan. Their market cap is 7 or 8 times what Alaska Energy's is. Granted, they are ahead of us. They've de-risked the project further, and they're deserving of a high market cap. In fact, it should be much higher than it is.
Mm-hmm.
But yeah, we aim to catch up very quickly. I don't think it's fair to say that these are the largest deposits in the North America. I think it's fair to say that the largest of their type, these
Right.
bulk tonnage disseminated nickel sulfide deposits. I'm pretty sure, though, that Nikolai, our project, would count as the largest in the United States.
Gotcha. Okay, important clarification. So good to keep in mind just as we are diving deeper and you choose to dive in the company yourself as well.
Yeah. So bear in mind what I'm showing here is nickel equivalent, but not yet including the value of chromium and iron.
Yes.
Canada Nichols Crawford does have chrome and iron, as does ours, but I'd like to just show that addition. So we've added now, see, in our original calculation, there was no chrome or iron in, but now there's a lot, billions of pounds of chromium and iron,
Right.
and in both inferred and indicated categories. And so it really truly adds a huge amount to the deposit, and it increases the grade very significantly.
Mhm.
Up around 0.4% nickel equivalent, or 0.39 at the inferred category. So, that's a pretty darn decent grade. We don't know yet how much of all this metal will be recovered. We're working on that right now. We're going to have an answer on that within a few weeks,
Right.
and we'll publish it. But so far, it's looking pretty good.
Excellent.
Yeah,
Or would you mind just perhaps like explaining what are the actual steps like required in order to kind of prove that process or the actual resource of or potential, let's say?
yeah. For the metal recovery, you mean the
Yes,
metallurgical?
yeah, that's
Yeah,
correct.
yeah.
Yeah.
So we've supplied large composite samples of drill core to the laboratory that is doing the testing, and so
Right.
they crush it and grind it, and then do selective flotation. And so we use a long established process to float off the valuable minerals. So nickel and copper and cobalt sulfides under the right conditions in the slurry float to the top, and you can recover those, and then you can experiment with that to maximize the amount of metal recovery. In the end, a concentrate of metal powder is formed.
Right.
And typically, the precious metals will be included in that flotation product. You're not going to get all of it by any means, and in fact, so far we're only assuming that we would recover around 50% of those precious metals. But that there's always experimentation to maximize and optimize. The chrome and iron's a different situation. You still have to crush and grind that ore, but then it is subjected to magnetic separation. Of course, the iron
Gotcha.
for that matter, the chromium mineral is slightly magnetic. And so we can separate those metals by magnetic separation. So you end up with two different concentrates, a chrome iron concentrate, and then a copper nickel cobalt concentrate that will have a certain amount of precious metals in it.
Cool. Yeah, no, it's interesting the technology behind it and just like the process itself. And so just to summarize, then you are doing both the precious metal recoveries as well as the chromium and iron at the same time, but they are just going under two different processes in order
That's
to
correct.
actually determine
Yeah.
that. Awesome.
Yeah, and this is just the first pass work that we're doing. There will be all kinds of experimentation in the ensuing years to see what is the best combination, how many different concentrates have to be made.
Right.
We're experimenting now with how finely ground the ore has to be to maximize the value, but also keep the costs as low as possible because grinding is expensive.
Cool. Yeah, I feel like people don't really get a chance to appreciate or understand kind of the science that goes behind it in order to actually derive like the potential that comes from this whole thing.
You bet.
Yeah. Awesome.
So just to close out again, a similar chart here that shows measured and indicated nickel and inferred nickel, and then the same categories of nickel equivalent metal. And so when you include the inferred and you include the chromium and iron, it's apparent that Canada Nickel's Crawford is still the biggest. If you add up all, that would be the nickel if you added those two together. And so they'd still have a deposit that's bigger than ours, but ours is open. It can grow further with more drilling, and we can convert our inferred resources to indicated with relatively little drilling. And so, yeah, I think that we will catch up in terms of valuation with Canada Nickel soon, and can expect to attract strategic partnerships.
Absolutely, yeah. And just one more note on this slide too is just to understand that this is being compared to, again, one of the largest bulk deposits here. But if you look at compared to the other comparatives on the actual chart, you just kind of realize and appreciate how big Alaska Energy Metals deposit can be when seeing and comparing to these other peers as well. So I think it is important to see that this is on par with the much larger Crawford deposit, but it shows the scale and pure magnitude relative to these other peers also.
Right. One thing
Awesome.
I want to show you next, Declan, is the pit again, and actually smaller pits that concentrate on the higher grade portion of the deposit, because that's extremely important in the overall economics. It's important with these large scale projects to pay back the capital cost as early in the mine's life as you possibly can. Once
Right.
everything's paid for, then it's just an operating cost, and you can make money. But you've got to
Mm-hmm.
get that capital paid back quickly. And we're very fortunate that we've got this higher grade zone shown here in the map in pink. And if you see this green outline, those are smaller pits focused right on that higher grade core.
Right.
And that means that the grade is substantially higher, and therefore should pay back the deposit quickly. We haven't done, the even the first pass preliminary economic assessment. That's going to
Right.
be our next step, and that work will
Right.
get underway really soon. But yeah, you can imagine looking at this cross section. If you use a 0.25% cutoff, now you're looking at a smaller pit, smaller in dimension and shallower, but you'd be getting all that higher grade mineralization. And in fact, you'd start with a pit that's even, a quarter that deep, and all of the material coming out of the pit for the initial years would be the higher grade ore. So I think we've got a really good configuration to maximize the chances of rapid payback, and therefore have strong economics on the project.
Absolutely. And just to summarize what you're saying there too is essentially that that green outline or circle, like you're essentially assuming that that payback can be achieved just with those smaller concentrations rather than the true size and scale that extends even further beyond that long term. Is that correct?
That's right. I don't think we need to do any more drilling to show the deposit bigger. It does
Mm-hmm.
go extend in both directions, and even deeper, but that would start to become irrelevant in an
Right.
economic calculation. It's really the first 10 to 20 years that are the most important, especially the first 10. The quicker that payback happens, if it happens in 2 or 3 years,
Mm-hmm.
that's the best outcome you can hope for. So having that higher grade mineralization right at surface is really going to be helpful for the economics.
Right. And certainly offers a lot more potential to attract potential partners as well that can come in and develop it as well.
That's right.
Awesome. Right on. Well, just as we wrap up the presentation, is there any final notes on that, or can we transition kind of just on the further discussion here?
Yeah, let's move on, because there's all kinds of things happening geopolitically in the world right now that could have quite astounding effects on uh, mineral and mining of metals all over the world.
Yeah, absolutely. So, why don't we kick things off? There was an executive order recently announced by President Trump and the Trump administration, and it discussed to adding additional investments and support in Alaska. So, I noticed that you had supported this through one of your press releases, and perhaps you could just comment on that and the significance of it, and then how it relates to the company.
Sure. Well, Alaska is a really pro-resource state. It's a wealthy state that's made a lot of money, particularly from oil production over the last 4, 5 decades. And but we do have tremendous mineral wealth as well, and that's being recognized. Our congressional delegation, our Congress men and women and senators have really supported the mineral industry, as has our state governor. So it was great to see Alaska be called out in an executive order from the president entitled Unleashing Alaska's Extraordinary Resource Potential. So we have an exceptionally supportive state government and now a federal government that realizes the country's vulnerability on supply chain disruption, and that will be very supportive of not just refining and use of metals, as was the prior administration, but the actual upstream end of metal supply mining.
Right.
And so I think we're going to get a lot of support in our state for metal mining production.
Right. Well, and on that note too, I think it obviously the current events that are unfolding right now, there is a trade conflict or trade war occurring with multiple countries right now. And I think it's a good understanding, though, to, as you mentioned, the current administration is recognizing kind of this dependence that has existed for quite some time. And even a couple of weeks ago, it was announced that China would be blocking, I think it was 5 strategic metals. So it showcases how when there is this dependency and you rely on other nations, in an instant, it could be cut off. And what are you going to do? Are you going to be like left twiddling your thumbs, or how are you going to respond? And so I think maybe you could discuss, or it would be valuable if you could discuss how Alaska Energy Metals Deposit kind of fits within this scheme and helps perhaps resolve some of the issues that may be arising as this trade war unfolds, and then people can get a good perspective of that all.
You bet. China has shown that it's perfectly prepared to weaponize the metal supply chains that it's built up over the last decades, while at the same time, the United States has essentially abandoned its metal supply chains, just thinking it could always get the metal. Well, that may not be the case. I think the way things are going, it could actually cause a national emergency.
Right.
And it'll be a real eye opener for Americans if that's the case.
Mhm.
In the specific case of nickel, there's only one small mine in the entire United States, and so the country is almost completely reliant on imports for nickel. Well, good neighbor Canada produces a fair bit of nickel and has been providing about half of what the United States needs. The rest comes from other places in the world, and some of those places are, the acronym is, or the name the federal government in the United States uses is Federal Entities of Concern, Russia, China, countries that are adversarial at times. Indonesia is by far the world's biggest producer of nickel and has increased its production over the last decade with China's help tremendously. But it's a lot of nickel they produce, but China controls the refining capacity of about 75% of that nickel. So all that nickel refined by Chinese companies in Indonesia goes to China. It doesn't come to North America. It maybe comes to North America as batteries or stainless steel, but it
Mhm.
doesn't come in raw form.
Right.
and it could get cut off just like that. And so, we have a president who says, America first. Well, that's great, but it really means that the country better develop its own mineral resources in a hurry.
Yeah.
Or it is going to find that it gets cut off and it could very well become a national emergency.
Yeah, absolutely. And it is important just to understand. I think more than anything, the key of this is to figure out some sort of self-reliance, and particularly when you do have like a resource or a deposit like at Alaska Energy Metals where you could tap in domestically, it makes sense to leverage that to your advantage, right? And so I think that is very important. But then also, we are discussing, and as you mentioned, there's been a long-standing friendly relationship with Canada, but even Premier Doug Ford of Ontario just announced a potential cutoff of nickel supply to the United States. And so, once again, you never can necessarily anticipate where your supply and products are coming, and it's best if you can build that dependencies for the long run, so that you don't get caught where you're not able to do anything, and as you mentioned, even potentially amount to like emergency as well.
Exactly.
Yeah.
Mhm.
Yeah.
But I really do think the U.S. government truly now at this point understands its vulnerability.
Right.
And it's bipartisan. The people I visited, Democrats and Republicans alike, understand the term critical and strategic metals. They understand that the country is vulnerable and that
Mhm.
something has to be done. And in particular, the United States Department of Defense has certainly recognized its vulnerability. It can't even produce everything that it wants for its defense components and quite a variety of metals. And so President Biden previously enacted the Defense Production Act. That's a World War II act originally that allowed mining of lots of different metals to meet that war effort in the Second World War. Well, that has freed up grant funding through the Defense Production Act, U.S. Department of Defense. And we've certainly applied for grant funding from that agency, and we're walking through the process. I have a strong conviction that we'll be successful in receiving grant funding. We look at other Alaska projects like Graphite One that received a grant in excess of 30 million US dollars to move their project through a feasibility study. So I think we've got a great chance of receiving some of that funding, and it'll be a game changer for us and our shareholders if that happens.
Right. And maybe you could like touch on what that funding would be used for in terms of progressing the project as well.
Yeah, well, we've applied for a variety of different levels of funding, but the bigger grants for which we've applied would put us on a very fast track, a 3-year program to move us from the current place we are, where we've established a large deposit, to the point where we've got a fully designed mine and mill complex and calculated a very rigorous feasibility study, and we're ready to hand in our permit applications applying to build a mine. 3-year project running flat
Gotcha.
out.
Gotcha. And maybe just to wrap things up, just a couple more questions here. But you mentioned early on how for the past couple of years there has largely been like an influx of supply of nickel generally, and China and Indonesia had largely flooded the market. And we've been discussing catalysts throughout, not only fundamental developments at Alaska Energy Metals, but as well as the U.S. administration or the country's recognition that there is this need to build some dependency. But perhaps you could also touch on why you do believe that the environment is changing and why those depressed nickel prices cannot sustain themselves for the long term, and how these next couple of years should show that anyways.
Right. Well, as I mentioned, China assisted Indonesia in developing its nickel mining and refining business, but they've done it very, very rapidly. They're mining the very highest grade, best parts of their deposits. Unfortunately, they're really running roughshod over people and the environment in doing that. But I
Yeah.
think Indonesia is starting to realize that this is not the right thing to do, that it's going too fast, that they're losing their very best deposits. And so I think there's likely to be a move on the part of Indonesia to slow the production down, to curtail the production somewhat. We've also heard of a very large Chinese-owned refining center in Indonesia that's gone, it looks like it's gone into bankruptcy and
Mm.
will shut down. And so there's likely to be supply disruption that will tend to push the price of nickel upwards. I'm not a predictor of metal prices, but as a practical person, one just needs to look at the nickel price charts and see that it's been a lot higher, that we've been dragging along the bottom for some time now. And so if you're a contrarian in the mining business, the bottom is the place to buy, and it's
Right.
likely to go up from here.
Mhm. Yeah, safe to say inevitably it will return to an equilibrium, and right now it's on the undervalued or depressed side at the time. So no, very interesting, and I think this has been very like informative, not only just the fundamentals of the actual project itself, but also understanding the current macroeconomic landscape as it relates to nickel, but also the many metals and resources or minerals that can potentially be unlocked within the Nikolai project there. So perhaps just to wrap things up here, is there any kind of final comments you wanted to talk about the recent developments or anything whatsoever?
Sure, Declan. No, just to recap, we've added a tremendous amount to this deposit in the last year of work. I look at the number of pounds of nickel and other metals that we've discovered and delineated. If you were to add it all up at today's prices, the value of the metal in the ground is way over a couple of $100 billion. And so even if you had a very conservative guess and think that, well, we'll only get half of that metal out of the ground, it's still over $100 billion worth of potentially recoverable metal. And that's pretty darn good going for 2 years of work. I think we've spent roughly 1.4 million US dollars to get that far. So, for each pound of nickel in the ground, it's cost us about somewhere around 1/10 of 1 cent per pound.
Wow.
I think that's a pretty darn good use of our shareholders' money. And if we can now have an influx of government grant funding that's non-dilutive to our shareholders, then in the end, I think they'll be very, very well rewarded, especially in a rising nickel price regime.
Mm-hmm. Well, I do have to give you props just for, as you mentioned, not only what you guys have accomplished so far, but I think as you're speaking to here is just your focus on putting shareholders first and trying to get the best bang for your buck as you develop this project. And so I think that is not only something that shareholders will appreciate, but I think it will have, or it'll help people just understand that not only is the project valuable, but the management team that is behind it as well, that is putting it into action. So, I mean, props to you for that. And just as investors and viewers are looking at this, as Greg mentioned here too, when you're looking at these numbers and seeing how much of an increase has come from this updated mineral resource estimate, just truly appreciate not only what metals exist, but also the size and scale and even the grade of it and how it compares and relates to other North American projects. So Greg, I think, is there anywhere specifically that you think investors or viewers should go check out to learn more about Alaska Energy Metals and the Nikolai Project?
Yeah, sure. You can always check out our website. It's easy to find. You can contact us if any existing or future investors want to talk directly to us, we're happy to speak with everybody.
Yeah, absolutely. And just so people are aware, that is alaskaenergymetals.com. So, Greg, thank you for the great conversation. I really appreciate you providing us an update here. And it's exciting to see all these developments. And we're excited to see this next stage for Alaska Energy Metals.
Thanks very much, Declan. Real pleasure.